Hello and welcome to a deeper dive with Dara Cam. That's me. Today we will be taking a deep dive into all things property insurance. We will be joined by special guest Fred Karlinsky, the global co-chair of the Insurance Regulatory and Transactions Practice at the international law firm of Greenberg Traurig. In addition, we have a special treat for our listeners. We'll be joined by the News Service of Florida's own executive editor, Jim Saunders, our in-house insurance guru, to discuss the state's troubled property insurance industry and the impacts that Hurricane Ian might have.
This won't be popular, but we should be grateful that the companies that are here are still here, because this is a very, very volatile market and it needs to change in order for the market to be sustainable into the future.
You're listening to A Deeper Dive with Dara, a podcast by City and State, Florida.
Before we begin, we here at City and State, Florida and the News Service of Florida just want to send out our support to everyone who is affected by this massive hurricane, and let everyone know, let all our listeners know, that you can help out by donating to Volunteer Florida. You can visit volunteerflorida.org to donate your services and dollars. We are very excited today to have two special guests. Our special guest is Fred Karlinsky, global co-chair of the Insurance and Transactions Practice at the international law firm of Greenberg Traurig. Fred Karlinsky is Florida's insurance law guru. He has helped shape insurance policy in the state for the past 3 decades. In addition, we have here with me in the Terracotta Room the executive editor of the News Service of Florida, Jim Saunders. He is our in-house insurance guru. And Fred, thank you so much for joining us. You're on the phone with us. We have had this planned out for about 2 months, this conversation with you. And wow, it could not be more timely in the aftermath of Hurricane Ian.
No, absolutely. And Dara and Jim, thank you for having me today. And thanks for all you do for the people of Florida, for the political community, and for the citizenry of Florida just in general. I would just say that, Florida is a great state and we're a resilient state and we'll bounce back from this. But certainly any of these storms, especially one that takes out infrastructure like Ian has done, anything that takes loss of life from our citizens is certainly something that is devastating to not only the affected areas, but all Floridians. So appreciate you having me today and appreciate all you all do to get public service messages out and just to make sure that the public is informed.
Thank you so much. And, one of the reasons why we wanted to do this conversation with you is because Florida's insurance market was already gasping before this major, what could be the deadliest storm ever to hit Florida, before even Hurricane Ian made landfall. Jim was just telling me that 6 insurance companies have gone insolvent so far this year. And I think the initial that we're still in recovery phase after Ian made landfall this week. Estimated losses of $25 to $40 billion in insurance losses. I'm sure that's that number is likely to go up. How will the losses stemming from Hurricane Ian impact the Florida insurance market, Fred?
Well, they'll impact the Florida insurance market negatively. As you mentioned, the Florida market was already a troubled market before Ian hit, and certainly Ian will do us no favors. I mean, if you think about it in its basis form, insurance, and this is all lines of insurance, is based on some form of predictability because, and I teach a course at FSU Law School that I've done for the last 14 years on insurance law. And one of the first things I tell the students is that insurance is a unique product because it is the only product that I can think of where you don't know the cost of goods sold when you price the product. And think about that. If you're selling a car or you're selling eggs or you're selling a home, you know what the price of that product is when you price it. You don't know that in insurance. And what's happened in the state of Florida over the course of time is, and we've called it social inflation, we've called it all sorts of things. I'd call it in a lot of ways fraud. We've seen the prices of things happening in the state of Florida double and triple from where they would be for other states and for usual types of losses. And I'm talking specifically on the homeowner side. And so I think what we've seen is that there is a lack of predictability in the state of Florida. And so you think losses are going to be one thing. They're really one thing times 3 or 4, and that's created the insolvencies that we've seen. And while the legislature and the governor and the CFO have really put an emphasis, I mean, calling a special session in May was a big deal, right? And they went very far. They went farther, I think, than folks thought they would in terms of changes to the marketplace, trying to stabilize the marketplace. And the governor and the legislature showed extraordinary leadership in that regard. But you still have these legacy claims, and you still don't have all of the problems fixed. And so for the pricing on the policies that we have here, if the thought is the losses will be X and they're 2X, you need to do the math on that, and it's pretty simple. It's going to impact companies' surplus. It's going to, which impacts their ability to write business or to ultimately be a going concern. And so I think that's what we're seeing here. The other thing I would mention that I think is critical and something I've been talking about for a long time is, I mean, we have, regular inflation. We have the inflation that we're seeing now that we hadn't seen for a while. But also, you just see home prices and the cost of building and replacing a home because of inflation, because of labor costs, which are tied to inflation, and because of a number of other factors. You see what was $250,000 to rebuild now $500,000 or $600,000, and if you still had your policy pegged to $250,000 and you had a total loss, by and large, that's what you're going to get. Maybe there'll be some inflation factor contained within your policy, but that's a big issue, and it's a big issue for companies, especially if any of the rules change midstream for those companies.
So what do homeowners do if you're underinsured? Because you're right, home values or the ability to purchase the same home that you're living in now is getting increasingly more difficult for home buyers with pricing going through the roof. I guess that's starting to settle down a little bit. But so what do you do? I mean, you can't insure your house for more than it's worth. I mean, I'm a little like, how can homeowners as consumers protect themselves against that peril?
Well, you need to look at it every year. You need to make sure that you work with your insurance agent. You need to make sure that, obviously you have replacement costs. And if there's an inflation guard that you can buy within your policy, to buy that as well. And so it's really something, and look, no one wants to look at their insurance policies. I get it. It's not interesting to do. It's a boring thing to do. People will say, well, I don't understand what's in there. But the fact of the matter is you understand what you think the value of your home is, and you need to make sure you need to look at what it would cost to replace that home. And you need to have an interactive discussion with your insurance agent every year. I mean, just like you have a health checkup every year, financial checkups, and insurance is part of that financial checkup are really important to do. And so you really need to look at that, not every couple of years, but every year, because it's not a static situation, it's a dynamic situation.
But aren't people afraid to even talk about their policies with their agents because they're afraid they're going to get dropped? I mean, I know people who are terrified of making a claim. And I've lived in Midtown Tallahassee in a little house I bought it about 6 years ago. I've already in Tallahassee had 3 different insurers, not because I wanted to.
Yeah, no, the marketplace is certainly not stable, but I do think you need to have that dialogue with your agent to make sure that you're insured at the right rate, at the right value. And the other thing I would say a little bit about as it relates to insurance rates, I mean, insurance rates are not like something that someone pulls out of the air. There's a very laborious process that companies go through with OIR, and it's the same process or a similar process in every single state. And so you need to show empirically what rate you think you need. I know this will not be a popular thing to say to anyone. It's not popular around my house or, in the world I live in, where I'm paying bills just like every other Floridian. But unfortunately, based on the losses we've seen over the course of time, based on the cost of what these policies ultimately are, we still are not paying the right rate in the state of Florida. And that's not something, a lot of people want to blame that on Tallahassee or blame it on politicians. I mean, I guess if anything, you could say that because of some of the runaway litigation that the legislature hopefully will fix in the future, that's why we are where we are. But a lot of that stuff creeps up on people. If you think any of those 6 companies, the executives and officers and directors of those companies wanted to go out of business or knew that was going to be the outcome, they didn't. This has crept up on a lot of people. And it's interesting how quickly things can go wrong in insurance. And that's what's happened here. And I think a lot of the litigation that we've seen over the last couple of years is unprecedented. I mean, you heard and saw the testimony in the House and the Senate. 8% of all property claims are in the state of Florida, yet 80% of all litigation and fees paid out come from the state of Florida. And those are national figures, obviously. I mean, that is an outstanding disparity that, frankly, is unsustainable over the course of time. And so when you talk about 3 insurers in your small house in Tallahassee and the rates that you're paying, I'm sympathetic because I'm a policyholder here too, but I also probably am the person that knows too much in this area, and frankly, and I know again this won't be popular, but we should be grateful that the companies that are here are still here, because this is a very, very volatile market, and it needs to change in order for the market to be sustainable into the future.
Fred, I realize it's still early here in the aftermath of the storm, but do you expect a significant number of companies to either go insolvent or just to pull out of the market entirely once they can start to see the damage and the losses from the storm?
Well, it's always tough to prognosticate. I think, Jim, to answer that question, you need to look at these companies and see what kind of reinsurance they bought, if they bought the right amount of reinsurance, if this type of event and the losses from it were even foreseeable. So I think if there aren't any insolvencies, which I'm hopeful there won't be, but I'm realistic about as well, there will at least be a significant strain on the marketplace. When companies lose surplus, they can write less business. When they write less business, there's less chance for them to make some of the sins of the past, if you will, and I don't mean that in the negative sense. I'm talking about losses, for that matter, to help mask those and to help put those in a situation where you can smooth them out later down the road. So that may not exist, and that may lead to a self-fulfilling prophecy of some of these companies not being able to continue on. But a lot of it depends on how foreseeable an event like this is. The other thing I'd say about this event that people should be very cognizant of is that this is going to be a big flood event. And unfortunately, and no one ever really knows. I mean, I like to say when I'm giving speeches, when I'm talking about statistics, that 90% of all statistics out there are made up. And then I pause for a second and everyone realizes as I'm going through my statistics that, maybe there's something off with them, and there's something off with all statistics. But at the end of the day, what we do know is that not enough policyholders have flood insurance in the state of Florida. And this is going to be a big flood event. And so folks that have, and homeowners policies do not cover flood insurance. The National Flood Insurance Program, or in recent history, there have been a number of private carriers that have started to write flood insurance. But if you don't have flood insurance and this loss was caused by the peril of flood, you probably do not have a covered loss with your insurer. And so that becomes an issue too. So I think the disparity between whether these losses are caused by wind versus flood really is going to make a difference in terms of how companies will fare. And that creates a bad situation with policyholders, because on one hand, you've got a policyholder saying, look, I paid my premium for all these years to this company or these multiple companies. Either way, you paid premium. But if it's not a covered loss under that policy, then that company will not cover that. And so I would urge people, number one, I think the lesson learned here, which we've been telling people for a long time, is certainly if you're in a floodplain and you have a mortgage, you're likely required to buy flood insurance. But if you're not in a floodplain or you don't have a mortgage, like I'm not in a floodplain and I don't have a mortgage, but I have flood insurance through the NFIP, and then I have excess flood insurance. And so I think one of the most important messages to people here is that homeowners does not cover flood. Florida, in a lot of ways, as a state in general, is a flood zone, and you need to make sure you're covered for that peril.
You look out there, the path of the storm, not just in Southwest Florida or along the coast, but Wauchula, Winter Springs, Flagler County. I saw today there was reports a lot of flooding there. I mean, would people who don't live in floodplains are probably got water? People don't expect that, do they?
Well, they don't, but I think it was a lesson that we learned in 2004 and 2005 when 8 storms crisscrossed the state, that the whole state really is in the hurricane zone, that the whole state is in a flood zone, whether it's listed as a flood zone by the NFIP or not. And so people should understand that there's a price to pay for living as close to the water as we do. We live in paradise, and unfortunately storms are getting more aggressive and water is getting more aggressive. And I think people that are trying to protect their policies or their properties need to take note of that peril. I mean, we've seen it all too many times now, and I think our elected officials and governmental officials are doing a good word at trying to doing a good job at trying to get the word out on flood insurance, but you really need to make sure that you look at yourself financially and say, if my house is lost, can I afford that? And if I can't, you need to make sure that you're insuring at the proper level and for the proper risks.
If I could circle back on a couple issues, one of which is reinsurance. Some of the early analysis after the storm has kind of focused on that. The reinsurance market's already been fairly hard, and that it's going to get harder for insurers. A, do you agree with that? And B, will that make a big difference in terms of how the insurers react in terms of availability of coverage as well as rates?
Well, reinsurance as well as losses are some of the driving forces in terms of availability and affordability for Florida, and really for any state that has significant property risk like Florida does. And so I would say to you that the reinsurance market is a hard market now. We saw that in the 6/1 renewals. Most of the Florida companies renew at 6/1, some at 7/1, and some at 1/1. But we saw probably one of the most difficult renewals this past year. And I attribute that to a couple things. Number one, the reinsurers have taken extraordinary losses that they never intended to or thought they would take in Florida in terms of, what we're calling social inflation. I'll call fraud in some respects. But the reinsurers have really had a hard time for the last 4 or 5 years in Florida. And that's even without any major storms here. And so you look at just the day-to-day losses and what's gone on with water in those losses, with what's gone on with roof in those losses, and the number of claims that companies are seeing and the amount that those claims are costing to the insurers and consequently the reinsurers is far greater than anyone would have ever imagined in their pricing. And so I think that's created a significant issue and a significant pullback for the reinsurers. But also, if you think about it, reinsurance and insurance is money at risk. When interest rates go up and the return on investments go up, and then you look at the cost that the reinsurers are having to pay in a place like Florida, so those spreads, the margins, if you will, Florida gets a lot less attractive. And I think that's what we're seeing. And there's nothing that forces those companies to deploy capital to the reinsurance marketplace or to catastrophe risk or to the state of Florida. And so capital goes where capital is welcome. And if the reinsurers think that they've got a fair shot of making a fair return, as well as insurers, if they feel that way, they're going to stay in a place like Florida. But if they don't feel like there's a fair shot at a fair return, they're going to retreat from that. And it's more difficult for primary carriers to do that. It's very easy for reinsurers to do that. That marketplace is not regulated the way primary insurance is. And if it were regulated the way primary insurance was, it would just dry up. So there's no way to regulate that marketplace the same way. And so you need to make that capital feel welcome. And that capital right now feels like it's very much at risk in a state like Florida. And look, they know that there are certain risks they signed up for. They signed up for the risk of storms. They signed up for the risk of fires. What they didn't sign up for is attorney's fees through the roof. They didn't sign up for becoming warranty companies for roofs and for plumbing in houses. And so those types of things turn the market on its head, if you will, and put us in the situation that we're in today, which is only exacerbated by a storm like Ian. Those are some of the bad things. But there are some good things that we've seen here, especially in the state of Florida. Number one, Florida citizens, even though you could argue, and I think rightly so, that the change that the legislature made about 15 years ago as it related to the rates in Citizens has made Citizens way more attractive than it should be. But Citizens is working. By and large, when companies are going down, Citizens is taking over those policies. The tax exemption in Citizens allows it to, in good years, retain the dollars that are paid into that entity by Floridians as opposed to sending the money to the IRS. So Citizens has a fair amount of capital available to it, a fair amount of cash available to it, that it has grown organically when times have been better than they are now. Similarly, the CAT fund, which is also tax exempt, is in the same boat. The Cat Fund and Citizens have amassed a significant amount of cash that is available to pay claims for, in the case of Citizens, their policyholders. In the case of the Cat Fund, all the policyholders that are covered for property insurance on the homeowner side in the state of Florida. And so those are positive aspects of the Florida marketplace that people should focus on as well. I mean, it's easy to focus on the negative. It's easy to say that everything's wrong, but certainly, again, set aside Citizens rates, which are a big issue, but the way Citizens is operating in terms of picking up these policies, in terms of paying claims, in terms of the ability to finance there, and again, similarly at the Cat Fund level, those things are working, and they're working well.
Thanks for listening. We'll be right back.
Here at Deeper Dive, we want to hear from you, the listeners. We invite you to send your questions, comments, and feedback to our mailbag. You can reach us at deeperdive@cityandstatefl.com. That's deeperdive@cityandstatefl.com. Get your 2 cents in by sending us an email.
Welcome back to A Deeper Dive with Dara. But Fred, what impact do you think that Ian will have on Citizens? I haven't seen any estimates, and maybe you are aware of this, of how many Citizens policies might have been affected by Ian. What effect do you think this storm will have on Citizens' stability, and is it going to end up driving more folks into Citizens?
So I think more people will get driven into Citizens because of potential insolvencies and because of the surplus diminution of the domestics, and that'll mean that they can write less. So I do think Citizens is going to continue to grow. It was going to before Ian. Ian is only going to make it that much larger. I would say to you that, though, while Citizens and the Cat Fund are in good shape in terms of the amount of cash that they both have on hand, it is clear that both Citizens and the Cat Fund will take a significant hit to their cash on hand. Some people would call it capital, some people call it surplus. I really just think it's the cash that they have on hand. So I don't know, as we sit here today, just a few days after the storm, what those numbers will be. I can tell you all the estimates are going to be wrong. They're probably going to be wrong on the low end because everyone wants to try to be optimistic here, and that makes sense. But at the end of the day, what we've seen over the course of the last couple of years, after the last couple of storms, and after what we've seen in terms of the day-to-day losses, is they're normally much worse than people imagine when you consider litigation, when you consider social inflation. And so I think that no matter how this plays out, both Citizens and the Cat Fund are going to have some of the cash that they have on hand, some of their claims paying capacity diminished because of these storms. And it could be, I don't know that it will dry those entities up, but it could be very significant. And you don't know that. I mean, these things play out over the course of time. As you all know from what the legislature's done, I mean, there were basically unlimited time frames to file claims. Now that time frame is compressed to 2 years, but that still means that we're going to be seeing claims put in for Ian, 2 years from now, and who knows how those are going to ultimately play themselves out. But I also don't want to downplay this issue on wind versus water, because I do think a lot of what we're going to see are claims that arguably should be covered by the National Flood Insurance Program. And that becomes a very uncomfortable discussion when someone has regular homeowners insurance, homeowners insurance through a private carrier that does not cover flood, and they don't have flood insurance, you see the creative public adjusters, the creative attorneys try to make those claims property claims where they're really NFIP claims.
So what you guys have been trying, what everyone, and you guys, the legislature and insurance experts like you have been trying to do, is to tamp down the number of lawsuits you've alluded to several times. Do you anticipate, because of this flood versus wind issue, I've been thinking all throughout our conversation, that sounds to me like it's going to lead to more litigation.
Well, it very well could lead to more litigation, which obviously is problematic, and it's not helpful to anyone, because ultimately those are costs that just go out of the system and really aren't paid to policyholders. But I do think the question on wind versus water in some cases is going to wind up leading to more litigation. The hope that I would have is that people would be reasonable and understand, and it's tough. I mean, there's emotion involved. You're losing your house and you've paid dollars to the insurer. I get it, but those policies don't cover flood. And if the NFIP should have covered it, and you don't have an NFIP policy or a private flood insurance policy, the results are not good. And I understand that's emotional. I understand it's financially catastrophic, but I don't know any other way to say it. But those policies would not be covered under a property insurance policy.
Looking at appellate court cases, there's still a lot of IRMA cases out there that keep popping up in the courts. How long is it going to take, from a legal perspective, to work its way? I mean, this is bigger than IRMA. How long is it going to take to work its way through the system so we'll know some of the answers to these questions?
Some of it will take years. Some of it could take decades. I mean, some of these are very complicated types of claims. And again, you're going to have people on all sides of the aisle saying, well, this is the way it should be, or that's the way it should be. And hopefully the science will be pretty clear. I mean, to me, it seems pretty clear that a lot of this is flood, but that's not going to be a popular answer for anyone to hear, because very few people have flood insurance. And so you're going to hear a lot of arguments the other way. And look, I'm telling you what I'm seeing. I'm not a scientist. I don't know exactly how these things play out. I can just tell you that when you're that close to the coast, especially, a lot of this is going to be flood. A lot of this is going to be water.
You alluded to the special session that was held in May. There's been a lot of discussion that there could be another special session. Well, even before Ian hit, there was a lot of discussion about another potential special session after the election to deal with insurance issues. Do you expect a special session, and what would you expect to happen, or what would you hope to happen in a special session?
Well, I think the governor and the legislative leadership and the CFO and others really tried very hard in the May special session to get to a better place. And I think it was a very good effort and a very good start. I do think that the one-way attorney's fees in Florida still presents significant issues for insurance companies in terms of being able to predict losses. I do think roofs still, and look, everyone's sympathetic to what happens to a roof with a roof, but insurance policies, homeowners policies, are not intended to be maintenance policies. And so when a roof flies off of a house and that roof probably has no more useful life, is it appropriate for every single person on that street, every single person in a community, every single person in a city, every single person in the state to subsidize those roofs? The answer is no. Again, not a popular answer, but the only answer economically that makes sense if you're trying to predict how these losses should play out. And insurance is a very complicated issue. It's not an issue that you get any votes from. It's an issue that you probably lose some in discussing. And so it does take extraordinary leadership to talk this issue through. And I think the legislature, the governor, the CFO, and others have shown that they're willing to tackle these issues. I think that they went farther than many people thought in the May special session. And look, I love the fact, or maybe I hate it, that people try to pit the insurers versus others on these issues. These aren't insurance issues. These are consumer issues. The insurers are telling you, and if you think about it, if insurance was so great in Florida, why wouldn't we have more competition? If insurance was so great in Florida, why would 6 companies have gone out of business in the last year? It's not. And so the legislature and the governor and the leadership in Tallahassee are doing what they need to, not for the insurers, but for the citizens of Florida to be able to own real estate, to be able to trade real estate, to be able to have more people come into the state to buy real estate. But there is a cost to that. And what we have now with some of the water losses, some of the roof losses, some of the attorney's fees, those things don't work for capital to deploy to the state of Florida in the primary market, or for capital to deploy to the state of Florida in the reinsurance market. And so until those things can get resolved and settled, the market is going to be very problematic, and Ian only makes it worse. And if you think about it historically, where we've been in the state of Florida, we had mold. Mold was gold. That's what everyone was saying. Then we had sinkholes that really weren't sinkholes. They were cracks in driveways and cracks in tiles. And look, no one wants to have those cracked tiles, but a sinkhole is like the definition of pornography. I don't know what it is, but I know it when I see it. I mean, a sinkhole is when a home falls into the ground. And it's amazing that in Senate Bill 408, when we made it so if you made a sinkhole claim, or the legislature made it so, where if you have a sinkhole claim, you have to report that to the local tax assessor, all of a sudden, believe it or not, sinkholes went away. When we made a sublimit on mold, and it became less attractive for people, and it's amazing to me that mold just started. By the way, the world's been in existence for hundreds of thousands of years, but mold just started in the 90s in Florida. I'm saying that tongue in cheek, obviously, but it became a litigation fodder. And so, those things are under control. Well, then you had AOB, the legislature tried to deal with that, and it's all driven by outsized claims costs. And those things need to be contained in order for this market to, not even be healthy at this point, just to somewhat stabilize the market. And until that happens, the market is going to continue to be an unstable market.
So what more can they do? You mentioned the May special session. What can you tell us just real quickly what they did during the special session? Is it too soon for us to be realizing any gains from that, and what more needs to be done?
Well, it sort of is too soon to realize gains. I mean, we've all heard the discussion on this. The way insurance policies work, they're contracts. So you can't change a contract midterm. And so it takes a while to work with the Office of Insurance Regulation to change language and policies so that any impact that the legislature makes will take effect. The legislature has done, over the course of the last several sessions, a lot of things to try and rein in AOB, to try and rein in one-way attorney's fees, to try and create more reinsurance capacity through the RAP program that was put in place in Maine. So the legislature and the governor have done quite a bit in that area. But at the end of the day, property insurance policies cannot be considered maintenance policies in order for them to be viable policies. And at the end of the day, property insurers can't always have the threat of the one-way attorney's fees, meaning that not only do they have to pay their defense costs, not only do they have to pay for any experts or other things to get you ready for defending a claim or for a trial, but they're also potentially paying the other side's fees. I mean, those dollars are not free dollars. Those are all coming out of a company. Ultimately, they're going to get passed on to the policyholders, and that's why we're in the situation we're in. So the litigation environment needs to be calmed down in the state of Florida in terms of property claims. The property claims that we pay need to be realistic in terms of, if you've got a 20-year-old roof, you can't get a new roof. That makes this not a property insurance policy, but a maintenance policy. And so I think those types of things, attorney's fees and the types of claims that are out there, these maintenance type of claims, if you will, that those types of things really do need to be addressed in the long haul, and the availability of reinsurance as well. I mean, the CAT fund has been a good mechanism. I think the reinsurance community has been very supportive of the state of Florida. If you look at Bermuda, if you look at London, those are places that understand this market well. They want to provide capacity here, but it's becoming very hard for them to deploy capital in a place where that capital seems at an extraordinary risk from any type of risk that they could have imagined as it relates to what the risk is in the state of Florida. The risk of a hurricane is something that they can comprehend. The risk of a fire is something they can comprehend. They can't comprehend a small water leak being a $300,000 claim. They can't comprehend roofs that a policyholder or a homeowner should be replacing themselves as an insured risk. And so I think when you see those absurd results, you're in a situation where capital walks, and that's what's happened here.
And does that mean that the rates need to go up? I mean, do people need to plan on an increase in the amount of their insurance policies?
Well, all I can say is it's pretty simple if you think about it. Okay, if insurance companies, if their losses in the state of Florida are running at a 110 or a 120 or a 130, that means for every dollar they're taking in, they're paying out 10 cents more or 20 cents more or 30 cents more. That's not a sustainable business. Grocery stores couldn't operate that way. Ice cream stores couldn't operate that way. Car dealers couldn't operate that way. And so in order to bring that back to equilibrium, the only resolutions to that are to add more premium into the system, which obviously hurts consumers, or to try to tamp down losses. And if you can tamp down the losses, basically you can try to keep the premium under control. But that takes a while, as we've talked about. It can take 18 to 24 months in order to have that work through the system. I mean, insurance companies, again, go back to the first principle I talked about, which is insurance is the only product that you don't know the cost of goods sold. The worst insurance company you could have is one that can't pay its claims. And so we all have an interest in trying to make these companies be as solvent as possible. But in order to do that, we need to stop the rampant abuse and fraud that's gone on over the course of time.
Well, there you have it. Everybody run out and purchase some flood insurance yesterday. Thank you so much, Fred Karlinsky, for joining us here today on A Deeper Dive with Dara Cam and Jim Saunders. We really appreciate you taking the time.
I'm happy to do it. Everyone, be safe out there. Make sure that you look at your insurance policy at least once a year. And when you talk to your neighbors and you talk to your friends and you talk to your coworkers, make sure folks understand that insurance fraud and inflated insurance claims are not free. Those are things that we all as Floridians pay for. And so make sure that what we're seeing out there are the real losses and losses that should be covered by insurance versus some other way.
A Deeper Dive with Dara is a podcast by City and State Florida, hosted by Dara Cam, produced by Ryan Daly, and music for the podcast was recorded by Periodic Labs LLC and performed by Ryan Daly and Danny Reyes.